Hey, what's happening, guys? Dan Dyro here with another Options and Play video update. Hope you're all loving this volatility because, man, oh man, are we seeing some crazy action these last few days? Well, last few weeks, right? Uh, just neck neck turning moves, just stop on a dime, reversed, big volume, big ranges, a lot of two-way trading. I mean, it's all you could really ask for as a trader, and I mean, it really all comes down to time frames, right? I mean, things on a very 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 short time frame seem to have a little bit more visibility, right? Because of like these really ultra fast moves, wide ranges. Um, but then pushing stuff out maybe like 2 months, right? So I talked about this in a video just recently about like when you get these periods of volatility, it's easier to focus on like very short term and then longer term. So like 1.5 to 2 months versus like that midterm swing, right? Like a few weeks to like a month time frame. Um, Also, like when you get these periods of volatility, obviously a lot of traders or money managers are rushing into hedges, right? I mean, they're looking to park their money somewhere that maybe a little bit less risk, right, or lower beta stuff. And we've been riding the metals for a while, gold, silver, right? But we actually haven't traded GDX or any of the miners. And what was interesting, just kind of doing some screening, just trying to still find areas or pockets of hedges that maybe still aren't like super extended on the upside. That GDX was actually lagging a little bit, right? So you have gold. So gold right at its 52-week high, right, and silver right there as well. But GDX actually lagging, right? And what's really pretty obvious is like this like clean stair stepping pattern, right? So you have just like this really obvious pattern that it's followed. Draw this here. So over like the last 2 months, right? I mean, you've had this really clean pattern where real big surge, flag, breakout, surge, flag, breakout, surge, flag, right? And just it doesn't take like a master chart technician to kind of like measure the extensions and measure the time frames, right? So when it broke out, it had essentially like a 10% measured move, right, over about a 2 week time frame. So again, when it broke out, it had about a 10% move. This one was over about only really about a few day time frame. So you're looking on average about 10%, right? I mean that's what it top breakout, top to top breakout, top to top, and anywhere from 2 weeks to maybe like a week, right? Like 4 or 5 days. So this move has been playing out pretty fast, been pretty consistent, and to be honest, I mean with gold and silver both at their highs, I mean it doesn't seem like there's any reason to think that it can't possibly happen again, right? Plus, it held like this really important momentum moving average, right? The 20-day has been pretty critical on the way up, right? It didn't quite get to it at the beginning of July, got to it at the end of July, August, held, got down to it again, held, right? Gold at the high, silver at the high. So what you're looking at is maybe like a like a 10% extension, right? I mean, based off like the previous two patterns, and then the time frame anywhere from like a week to 2 weeks, right? And just going out through options, again, I mean, sometimes like the time frames, even if you're only looking at like maybe like a week or 2 week potential holding period, it does sometimes make more sense to go out a little bit further, just because you get yes, you got to pay a little bit more for the time premium, right? But it also means that you give yourself a little wider window, and also the implied volatility, right? The implied volatility be a little bit lower if you go out a little bit further, just because when you're in an overall higher implied in volatility environment, stuff tends to be a little bit more expensive. So to smooth that out, you go out a little bit further. Again, it requires paying a little bit extra on the debit front, but it also gives you a little bit lower implied volatility. Okay, so just an interesting setup developing. Pretty clean stair stepping pattern, right? Gold, again, gold at the high, right? gold still doing well, silver still doing well, and GDX is holding the momentum trend. So put this on your radar. Maybe if you're looking at something maybe that's a little bit more hedge oriented, or maybe a little bit more inflation oriented, right? Something to keep an eye on. So take a look. All right, guys. So we wrap up tomorrow. We got a couple tech names tonight, and then you got Deer tomorrow morning, and that wraps up the week. We're getting towards the end of earnings season, and we're getting towards the end of August. So earnings are going to be a little bit fewer and farther between. So the focus shifts from like catalyst ideas to more to swing ideas. So it's kind of like finding like these nice swing setups. Really working on your time frames, right? That's always important when it comes to swings is the time frame, the holding period, and targets, right? You're working on targets, and especially in a market like this, I think it probably makes more sense to be a little bit more conservative with the targets just because the visibility is a little bit lower. But yeah, I mean, expect a lot more swing ideas over like the next few weeks to a month before earnings pick up again in October. All right, so have a wonderful night, and I'll talk to you guys all tomorrow.